I think there's an interesting angle. From the start of 2017 in through this June, we at Blue Line Futures were very bullish on the Treasury complex for many reasons. One main reason, though, was the massive mounting of a record net short position in the complex, in the futures, leveraged. So this was a ticking time bomb. It was going to explode sometime, and it is exploding right now. We are seeing capitulation. We're seeing the 2- and 10-year inverting. We're seeing record low yields in the 30-year right now. Now, if this proves to be a capitulation, there is going to be opportunity, not only in the Treasury complex, but also things like the banks. And I think, where are there constructive charts in the banks right now? Goldman Sachs is one of them. There's a nice channel from the December low, a trend line that's going up, and we're testing near it right now. Just below 195 is the trend line. We're hitting the 200-day moving average. There's good support there in Goldman Sachs. I think there's value here, as well. Just stay within that defined channel, recover from here. J.P. Morgan, though it's been hitting a ceiling, there is, if you squint your eyes, there is a bit of an inverted head and shoulders pattern developing, and that could be a bullish pattern as well. So if this proves to be a capitulation in the rates, then I think there's opportunities in the banks.
And Erin, that's what I want to pick up with you on. I think the use of the word capitulation is pretty interesting because it means one of two things. It means either that, this trade has gone too far and it's time, for it to go the other way. Or in the case of what a lot of the macro bears think right now, capitulation means throw in the towel, the business cycle's over.
So for me, I don't see this being a capitulation just yet. I think that the two major issues we have are, even if the yield curve gets away from being inverted, we're still looking at very flat, very tough margins, very tough growth prospects over the next year. And then on top of it, financials are really very much a value play, and that we have not seen in the market. Even taking into account the last week and a half, investors are still very growth focused. So until you really see value taking a lead, financials aren't going to be the leaders. That being said, the one stock that I would be willing to take on a very short-term trade basis is E-Trade, brokerage rather than more of a bank. It's at the bottom of its trading range, and I think it could easily pop back up to 49.
I just think anything that's said with a grimace, I'm not totally sold on. Bill,
very short term.
Yeah. Bill, I'll give you the final word then. You said Goldman Sachs, you like the chart. J.P. Morgan, you think it looks interesting. What don't you like? What would you caution investors to stay away from?
I'd stay away from the Wells Fargos right now. And don't force a trade. I think overall, you want to play your game plan. Look for constructive charts that look good, and you're finding some value. Where's their support? Don't chase things in an environment like this.
All right.